Hello, income growers and harvesters. Welcome back to the Harvesting Income channel. Today, we are going to talk about an interesting fund which has a mix of the Berkshire Hathaway stock, which is the underlying investment, plus using a covered call strategy on top of it generate income. So, ladies and gentlemen, now we have the interesting fund which is named BRKY. That's the ticker symbol. You see that on my screen. Berkshire Hathaway Yield Shares Purpose ETF. That's the name of the fund, and they buy the Berkshire Hathaway stock and write covered calls on the same. This is basically combining blue chip and value investing along with the covered calls. Is this going to be the true holy grail of investing and success formula for investors to get better returns from the market? Let's wait and see. Okay, anything presented here is only for knowledge purpose, so it's not an investment recommendation, not financial advice. So with that disclaimer, let's understand the fund in detail now. Berkshire Hathaway Yield Shares ETF, and this is the fund from Purpose Investments. Strategy is pretty simple. Invest in the Berkshire Hathaway shares and use a moderate leverage. That's an extra addition to that. They use 25% leverage, which is moderate. And secondly, fund earns attractive monthly yield or aims to earn attractive monthly yield from using a covered call strategy, covered call option strategy. And the way it works is they write options on 50% of the portfolio. So the other 50% of the portfolio is just works like a long position on the Berkshire Hathaway. So that way, you get a mix of covered call premiums income, plus also you get exposure to the capital appreciation for 50% of the portfolio. So that's the basic design of the fund. So strategy pretty interesting, pretty simple, not that much complicated. Ticker symbol is BRKY. This is the basic metrics of the fund. Price is about $27 something, and so started like about more than 2 years ago, like in December 2022. So it has some history, some data to look at. And net assets is 43 million, pretty small fund relatively speaking. And the expense ratio is 1.8%. It's on the higher side. Management fee is about 0.4%. So again, adding all the costs, it comes to 1.8%. That is pretty high. And you have the price returns 1 year. So how the returns have done over the past 1 year? That's the question that all of you have, right? So in terms of the returns, when I look at the current market price, it's about $27. 1 year ago, it was 25.68. So doing the math, I find that it was about a 6% return, like 6.2% to be more precise. And if you look at this number, it looks like okay, fine, it's given us a positive return last 1 year. However, when you compare it with the Berkshire Hathaway, the underlying stock has given us 12% returns. So basically, the covered call fund is not capturing the full price appreciation, but of course, it's capturing half of it, which is somewhat decent. But I mean, I don't see a great performance here. So in terms of the price appreciation alone, it's not that impressive. So I'm just put the thumbs down here. However, you have to keep in mind that BRKY also provides distributions because it's a covered call fund. It also provides distributions. So the total returns is going to be slightly higher. And bear in mind that Berkshire Hathaway doesn't pay any dividends. So when you add up the dividends, probably it may be on the same level. That is, I'm talking about 1 year performance, but we also have to look at the longer term performance. Now let me move to the next area where you're going to look at the more interesting aspects over the long term. We look at the price return over the years, like for BRKY, the fund that we are looking at. You can see that the current year, like year to date, from January to June 2025, it's about 7% return. You can see that on the first line because this shows the returns year by year, and you can also see the returns for 1 month, 3 months, 7 months. You can see that year to date returns about 7%, and 1 year returns are about 18.69, which is impressive. But when you look at it year by year, you can know the clear difference or which years it has performed well. 2023 and 2024 were good years. Like they were able to make double-digit returns. So in 2024, they were about 25.8%, and 2023 about 14.5%. Pretty good for a cloud call ETF, and that too on a blue chip fund. And in 2022, it was 2.96, but it's just a 1 month data, so we don't have much information because it was launched end of 2022, so we're not going to count that. However, looking at the 2023, 2024 performance, it's pretty good, and year to date seems to be okay. For the past 2 years, they have done really, really well. But in my view, the fund cannot outperform the BRK because BRK pays no dividends, and they are able to reinvest back all their earnings into those companies and able to compound it further. So obviously, BRK is going to give you better returns than the BRKY. So I'll explain that. Before that, I'll just quickly give you the data on the dividends. Last trailing 12 months, the dividends were about 1.62. If I add up the monthly dividends for 12 months, it's 1.62. And when I compare that with the price, the dividend yield comes to 5.9%, close to 6%. Benchmark doesn't give any dividend yield, and the fund is able to give about 5.9%. However, compared to other covered call funds, this is a moderate yielding fund. Probably you can say low or moderate yield depending on how you want to classify it. I would say moderate yields. I think the yields are not going to be double digit. I'm talking about the distribution yields or the dividend yields of the fund. So, for someone looking for a strong flow of income, this may not be the perfect fund. However, if you're looking for moderate yield plus good capital appreciation, probably this is a good option for you to consider. And there could be fluctuation in the prices also. So, when I look at it from the total return point of view, uh, putting both the numbers together, like the price return was 6.2%, dividend yield was 5.9%. So totally it comes to 12.1, and returns of 12% looks good, impressive so far. However, we saw that on the price front they were losing, and BRK was providing 12% 1 year. So from a 1 year perspective, it's fine, but we need to still look long term. Since we have blue chips and value oriented funds, sorry, value oriented stocks, these stocks actually are less volatile, and that means you have lower premiums and lower yields. So that's could be the reason why the yields are pretty low. And because some of these stocks are recession proof or defensive stocks, defensive industries. So this is not typically a high yield fund. So I would like to draw that fact here. That could be a pawn for some people. Like you may not like it that way. Or for some people, you may like it because you like to have a conservative defensive portfolio and you want moderate dividend and moderate growth potential as well. So in that case, this is a good fit for you. And the important point to keep in mind is this fund can underperform the underlying, which is the Berkshire Hathaway. Obviously, any covered call fund which follows a specific stock or specific sector is going to underperform that stock or that underlying sector. So that is something to keep in mind. Okay. Now we have seen a lot of plus minus so many views. I'm going to just quickly summarize the pros and cons. And here, the pros, basically the exposure to Berkshire Hathaway stock, which has a blue chip portfolio, that is a good pro. And there's a potential for regular income on top of it using the covered call strategy, which is a great option. You don't have that option with Berkshire Hathaway stock. And if you want to do your own call writing, it's very complicated and it's a high cost, and you will also have to put in a lot of capital for margins, etc. Thirdly, it's a low price ticket for affordable participation. If you want to buy the Berkshire Hathaway shares, it's pretty expensive. This is a low ticket item, like it's probably $27. This fund invests in the holding company, and since you are investing in the whole holding company, you are actually getting a one shot diversification just by investing in one fund, which actually has a direct exposure to the Berkshire Hathaway's entire portfolio, not just one stock, but the entire portfolio of Berkshire Hathaway's underlying stocks, which could include the Coca-Cola, Apple, and various other companies in the Berkshire Hathaway portfolio. So those are the pros of this fund. This fund has a lot of cons. I have mentioned some of them below, and also high expense ratio is also one of them, which I have not mentioned here. But high expense ratio 1.8% is also a drawback. That's one. And second would be lower or no capital appreciation. So that's another major drawback. And since this fund also can underperform the Berkshire Hathaway, so people who are looking for that Berkshire Hathaway type of returns could be disappointed, and that could be an issue for some people. And premiums can be low sometimes, due to low volatility of BRK stocks. Like I told you, defensive stocks, they move around a little bit less, and they are less volatile, which means less premiums. And the fund cannot select the big stocks from the Berkshire Hathaway portfolio. They have to just invest in the overall Berkshire Hathaway, stock. So that's a positive in one way, but it's also a negative because there are funds like, for example, OMAH. That's one of the funds which actually chooses specific stocks from the portfolio of Berkshire Hathaway, and in that way they are able to give you that those blue chip exposure, but on a selective basis or a focused basis, rather than just blind buying the whole portfolio. You're able to select the best performance. So those are the pros and cons for you. And as we are going to the end of the video, like I always do, I'm going to share a few thoughts about this, and that can give you some clues about what this fund is for, and or who it is a better fit for. So let me share my thoughts here. But before I do that, let me put a quick disclaimer. These are just my personal views, and this is based on very limited data and information. So I could be completely wrong. So do your own research, before making any decisions, and do your own analysis on this. I am just talking about this fund in relation to the OMA, which is another fund, which is spelled OMAH. It is the Vista Shares Target 15 Berkshire Select Income ETF. I like OMAH for various reasons, but I'm just going to give you a few important points here. I'm not going to do a pro comparison. I like the OMAH ETF because it is going to select 20 stocks from the BRK portfolio. 20 stocks from the Berkshire Hathaway, 20 best ones based on certain metrics, certain criteria. So that makes life easier for us. And secondly, the individual stocks and covered calls combination will offer more premiums. So because individual stocks can, be highly volatile, and the stock premiums also can be richer or more attractive, which means that there is a higher potential of premium income and higher potential to have good distributions. So again, this can vary from stock to stock. So it's not common across all stocks. Some stocks would have very good, volatility. Some stocks are pretty slow, so it differs from one company to the other. But of course, OMAH has that ability to capture those higher premiums. BRKY is a good option for Canadian investors or accounts because it's much easier to directly get the exposure. And for people who want a passive and direct exposure to the BRK fund, it's a good option. However, one thing is there is a variability of the returns which is expected, and that is not bad. Any covered call fund, is not going to generate the exact same income every month, even though the distributions are kind of paid almost like on a similar basis. Sometimes you find that the fund's actual earnings could be different, and there are funds where the distributions are also variable. They earn variable premiums, and they distribute variable distributions as well. So it's all kind of designed in that way. So that's not necessarily bad according to me, or in my opinion, as long as the fund performs okay and you are comfortable with the level of risk and the level of returns that you are getting. Okay, remember the premium earnings of the fund also varies based on the market conditions. Sometimes the markets are pretty volatile and markets are bearish. That's the time when the premiums are pretty high, or when the markets are going down or flat for a longer period of time, and but still volatile. That's when premium harvesting is more attractive for the funds. And the strategy execution also has a play there. How the funds write the calls, and how whether they write at the money, out of the money, and what percentage of the portfolio is written off in the form of call options. All that depends on the strategy execution part of it. And funds generally pay like kind of a similar amount every month distribution to help some investors to plan for their returns rather than giving them shocks. So that's a kind of a design part of the strategy. So now I've given you the full picture about both the funds. BRKY is a good fund if you're looking for long-term investment in BRK and you're okay with moderate dividend yield and moderate capital appreciation, and you have a strong belief in the Berkshire Hathaway's investment philosophy, and you're willing to hold it for the long term, and it's a moderate mixture of both income and capital appreciation. Of course, the expense ratio of the fund is high. That's one drawback, and there are a few other pros and cons as well. So it's a good option for investors who want to get that exposure. Or you can even consider the other fund, OMAH, if you like that strategy. So, I leave the jury open. Like you can pick whichever you like. I hope you like the presentation and this video. If you have any comments, you can comment below if you like OMA or you like BRKY, and you can explain the reasons why you like one fund or the other. And I look forward to hearing from you. So if you like this video, feel free to subscribe to the channel and follow my channel. And also you can go and join the Facebook groups we have, and also you can go to Twitter and you can participate in my channel. I look forward to hearing your comments and thoughts below. Thank you. Have a great day. Happy investing.